A single failure and a new emerging communication technology caused a big financial crisis in the history. Yes, we are talking about the panic of 1857, where because of a new emerging technology, telegraph, the whole lender and railroad group were in turmoil and lost a lot of money due to the widespread failure of one bank. The early 1850s was the era of extraordinary optimism in the United States. Railroads were the cutting edge technology of that era, which promised to unite the vast American continent together. This project was financed through banks of New York and Boston, along with some help from London as well. The lenders thought this is the future of the market from where they could get the money for their whole life. Meanwhile, the global events added fuel to the fire. The Crimean War, which started from 1853 to 1856, disturbed the European agriculture, which made an urgent demand for American grains. US farmers and the merchants were prospered. Here comes the influx of California Gold 1849, which raised the credit and the liquidity for the company. It seemed like an age of endless growth. But by 1856, the crack began to appear. Crimean War ended, European agriculture recovered, and the demand for the US grain cooled sharply. Right at the same time, the railroad projects and the Western land projects, which were already stretched thin, looked precarious. The first shock came on 24 August 1857 when a major financial institute, Ohio Life Insurance and Trust Company, having ties to New York, suddenly suspended payments. That was the point when whole country's confidence in the banking sector shattered. And then comes the sea disaster. On September 12, the SS America, a steamship carrying around 30,000 pound California gold, sank in the hurricane off the Carolina coast. This gold was destined to the eastern banks to replenish their reserves, and this was the major disaster which actually exposed a lot of banks. What made this panic unique was the speed. The telegraph, a relatively new technology, transmitted the failure and disastrous news instantly across states and even across Atlantic. It spread faster than ever before. By October, the major eastern cities were gripped by bank runs. In New York and Philadelphia, banks suspended specie payment to survive. And right at the same time, across the ocean, Britain narrowly avoided the similar collapse by relaxing the strict rules and regulations of the 1844 Bank Charter Act, which allowed the Bank of England to extend the credit. The impact of this panic was that more than 100 US banks failed, railroad shares crattered, and unemployment soared in the industrial centers. Britain and part of the Europe suffered credit tightening as the American commodity flows faltered and the London investors retrenched. During this time, the US had no central bank, which means the note issuance and central banking was fragmented. The long credit expansion in rail and land, fueled by California gold inflow, turned abruptly. No lender of last resort, banks resorted to suspension of specie to survive their self. Their recovery took until 1861, aided by Civil War demands. Politically, this panic deepened the South and North tension. Northern unemployment and call for land reform met with Southern confidence in the King Cotton. Politicians argued about the tariff, land policy, and banking system, shadowing the Civil War debates. During mid-1857, some papers warned about the pre-monetary symptoms, which were exactly similar to 1837 crisis. Even a Boston banker, Nathan Appleton, decreed over lending. However, exuberance prevailed and no one listened to him. So the lesson we learned from this panic was the speed of information also speeds crisis as well. Without central bank backstops, suspension and contagion are the only circuit breakers.